We're joined by Anand Vardarajan, the Chief Business Head of Tata Mutual Fund. Neeraj, take it off.
Thanks so much. Okay, Anand Vardarajan is with us. And the numbers, Anand, thanks so much for joining in. Would love a perspective from you here. The SIP flows haven't really shown as big a dip, right? 400 crores could have well happened because of the lesser number of days. But the overall equity inflow number lower by 25 odd % as per my math. Is this the Indian consumer blinking, or are there one-offs here?
Yeah, I think on the SIP, you're right. You'll have to count 3 days lower. Jan had 31 days, so to that extent, I think that explains the dip. And in a full-blown month, I think your number should have been somewhat similar. In as far as the dip in equity numbers are concerned, I think, Neeraj, if you were to look at it, I think February was the first month where even your large cap 1-year returns had become flat, as flat can be. And to my mind, that could have had some sentiment impact, because your mid and small cap 1-year returns had turned negative sometime end of Jan, early Feb. But I think the last straw to my mind would have been, large cap or Nifty returns being flat to slightly negative. And that could have had some recency, impact as far as investor sentiment is concerned.
Yeah. So, Anand, please tell us, because two things actually. One, when we were doing some, channel checks mid-Feb, things weren't looking iffy when it regards to flows. So, is it a factor of the last 15 days that the inflows have dropped out? Part one. And part two, whether for Amphi or for your own business, how has March been thus far? Because I mean that 1 year, the mark that happened in February would have only gotten worse in the month of March, right? So are people pulling back on equity flows for the time being? What has been your own experience at Tata AMC?
Yeah, I'll just speak at an industry level. I think it was it was quite visible that flows were kind of ebbing towards the second half of February. For various reasons, I think when markets are also in correction mode. I think globally also there were a lot of noise, news flow in terms of tariff wars, etc. And to that extent, that kept the market somewhat kind of busy in terms of fresh data points. And the cues that you were getting, at least from the Western world, was not very great, be it market cues or data. And hence our markets are also kind of drifting downwards. I think about the last 4 or 5 months experience of the investor. Somewhere I think then the perception is that if markets are drifting downwards, I might get it even cheaper. Could have been some sentiment which investors would have had, and that could possibly explain why flows have ebbed a bit.
Okay, sorry. So just to get this clarity, Anand, is March also looking slightly skittish in terms of inflows into equity-linked funds?
I think the trend it continues as is. Very difficult to say how March will pan out. I think.
No, but thus far, is there? I mean, just again, only if you have, if you can answer. I wonder if thus far there is the trend continues on the downside.
Yeah, I would put it this way, that March trends could be very different because there are multiple events. Even from a liquidity standpoint, if you were to look at it, I think due to year-end liquidity becomes tight, and on fixed income side it becomes far more challenging than equity. So next couple of days would become critical on the fixed income side. Equity, I think it is more continuation of February. We're not seeing anything, any different trends from what we've seen in equities.
56% downtick in February in equity-linked funds, even if I account for 3 month-on-month, right? So even if I account for 3 days lesser, it'll still be about, it could still have been about 23% or 22% or thereabouts a dip month-on-month. So is that something continuing? I'm not happy seeing that, by the way, Anand, because I hope people stick for the long term. I'm not happy seeing that, but are we actually seeing that?
I'm going to hazard a guess for March, Neeraj, at this time because the month is wide open. Also, bear in mind that valuations are also only getting more attractive relative to what it was.
Yeah.
And uh, I really think the core of investing has always been, which we keep saying, is as markets rise, your risk increases, and as markets dip, your risk reduces. And I think this has to be understood well by investors, which I would believe that the retail investors, despite 4 or 5 months of slightly challenging market environment, we've seen strong flows. So I see no reason why they would not continue and stay invested and continue to add more at lower levels because the valuations are only getting attractive relative to its own past.
Okay, we'll leave it at that. Anand, thank you so much for taking the time out and being with us. Really appreciate your time.
Thank you.